What is going on, traders? Welcome back to the Traveling Trader. I'm going to be discussing the top stocks to buy for August 2020. I've been doing these videos for 2-3 months now. I've been getting some great feedback on it, and as long as you guys find it helpful, that's good enough for me. We'll also be doing a checkup of some of the stocks from my July 2020 video and see how those are doing. In my July video, I just went crazy and picked 21 stocks. This one's going to be a little shorter. We're going to be picking top 10 stocks to buy for August 2020. And if you find anything in this video helpful, go ahead and give it a thumbs up. Leave a comment down below. Let me know what it is you're trading and what your cost basis was, and if any of the stocks that I talked about are in your portfolio. And if you want to be part of our private trading group where I send out all of my stocks, options, and crypto plays, sign up, link is in the description below. Every option expiration Friday has become like an event in the group. This week we had Tesla, Spotify, Shopify, Novavax, all expiring for 100%. And you also get access to my portfolio on a real-time basis. Sign up, link is in the description. Would love to have you. All right, so just as a general strategy, let's take a step back and talk about things really quick before I jump into the actual stocks. If you haven't bought anything on the dip or on the crash, and you are just looking to enter the market now, my general suggestion would be keep cash on hand. As you can see, the S&P 500 is at resistance now. That's that chart that's right there behind me. But the S&P 500 is at resistance. And all of the FANG stocks, all of the big tech stocks already reported earnings last week and pushed the market up. But we're still in the midst of a pandemic with the recovery looking a little shaky. So unless you bought majorly on the crash or the dip like you were supposed to. But if you haven't and you're just starting to buy now, I would keep cash on hand in case we see another correction in the stock market. This stock market melt up has been welcomed, obviously, but absolutely unexpected in its rate of growth. And the chance that we see a correction doesn't have to be a crash, but the chance that we see a major correction coming up is very high. We're not fortune tellers. I can't tell you when. All I'm just saying is, as a general strategy, you want to keep cash on hand and you'll want to stick to blue chip and solid growth stocks at the retracements. Also mix in a few stocks that might be impervious to the pandemic, such as Costco or Walmart or Home Depot. That's just a general rule. Keep it in the back of your mind. Without further ado, let's get into an update on some of the stocks from the last top stocks video that I did in July. We'll see how they're doing, and then I'll go over the top stocks for August. Oh yeah, one more thing. The sweepstakes that I do every month where I pick a random comment and I enter that trade using my Webull account. That ends today, so I'll do a sweepstakes update at the end of the video. The last person picked ON Semiconductor. So leave a stocks or options play that you want me to get into. Leave it in the comment section below, and over the next couple of videos, I'll pick one at random and I'll enter it using my Webull account. There's a little over $1,000 in there, and I'll give you whatever the profits are. Whether it's 10% or 10,000%, I'll give you whatever those profits are. So leave the play that you want me to enter in the comment section below. All right, let's get into this video. So the first stock we'll look at from the last video that we'll get an update on is SPCE. SPCE, my cost basis was around $15.42. You'll see that in the last video. And once it popped above the 21 EMA on the 1 day, if you had bought into SPCE, you would be up around, at the peak, you would be up almost 80%. And if you held it and didn't take profits, you're still currently up about 45%. Limited Brands is the next stock that we'll take a look at from the last video. And my cost basis on Limited Brands, you can go back and see it in the video. I think it was around $15.12. Had a nice bounce off the 50-day moving average and then popped above the 21 EMA, which is when we bought. And if you had bought L Brands since the last video that I made, at its peak, you'd be up around 77%. It dipped a little bit now, but you'd still be up around 61, 62% on L Brands. Etsy is the next one that we'll take a look at. So let's get an update on Etsy real quick. My cost basis on Etsy was around $102.89. Let's just call it 103. It's currently up at around 118. Etsy is actually one that I really like for the long term. I like its business model, especially as we focus more on shopping from home. It's up currently 15% from when I put out the video. Moderna is the other one. Obviously, this is a hot stock because it has to do with the pandemic. This is the biopharmaceutical company that is working on a vaccine. Moderna, I continue to play options on. My cost basis on Moderna from the last video was around $62.08. So if you had bought Moderna when I bought it, at its peak, you'd be up around 52 or 53%. And, you know, it has since tanked and retraced, and it's currently up around 20%. I like buying Moderna on the retracements. I said that in the last video, especially when it pops above the 50 moving average here. You could see that every time it hits the 50 moving average, we get a little pop. This is what I mean by buying on the retracements. Teladoc, this one is big. My cost basis on Teladoc was around $187. I think it was $187.35. Teladoc breached the 200 mark rather easily. It's currently trading at around 237. So currently up on Teladoc around 26%. This is one that I like on major retracements as well, whether it's the 50-day moving average or closer to the 100-day moving average. If Teladoc retraces all the way down there, then I'm definitely re-entering. We'll go over 3 more. Facebook. This is a pretty easy one. They actually just killed their earnings the other day. My cost basis on Facebook was around 220. It is now at 253. There's really not much that you have to say about Facebook. This is one that it's almost a must to buy this on the retracements along with Microsoft and Apple. Currently up 15%. AMD, this one just went nuts. I did close I had a call on AMD that I closed a bit early. Unfortunately, but I have the stock. My cost basis on the stock was around $50.28. If you look at AMD where it's at now, it's currently at 77. It was helped a little bit by Intel just completely whiffing on its earnings. So up around 53% on AMD. And the last one I'll look at is Net. This one is a cloud-based stock that I'm bullish on, especially through the pandemic. And again, this is one that you can just almost automatically buy at the retracements to the major moving averages. My cost basis on Net was around $35, currently trading at around 41. So up about 18 or 19% on Net. All right, that is just an update on some of the stocks from the last video. Let us get into the top stocks for August. Like I said, I'm focusing on blue chips and growth stocks, especially at the retracement. So the first one I'm looking at for August is Disney. Now, Disney has been hit hard by the pandemic, mainly in its park business and in the movie business, since nobody is going to the movie theaters right now. However, it has a few saving graces, with Disney Plus growing its subscriber base every day, and with sports coming back, so ESPN is televising the NBA, for instance. Disneyland did push back its opening, but it's only a matter of time. However, on Disney, I would actually wait until earnings. This is one where, you know, if Disney does report, if it comes in reporting negative earnings, I think the estimated earnings per share is minus 0.61. The last earnings we saw Disney fall about 11 or 12% after earnings. So I would wait until earnings, which is coming up next week, August 4th. And if Disney does retrace, then I would definitely buy Disney at a discount. Disney's revenues and income is usually pretty healthy, as you would suspect. And its EBITDA numbers are positive year over year. You could see here the last 4 years on Disney. Its free cash flows is usually healthy as well. And it is a juggernaut in almost any industry that it is involved in. So I would definitely buy Disney on a retracement. But like I said, this one I would wait for earnings to see how it fares, and then I would re-add it to my portfolio for the long term on a dip. Next one is Microsoft. This is stock number 2, top stocks for August. Now, you might be thinking, hey, Microsoft already popped over 200 bucks. Is there any value left in Microsoft? Well, over the long term, yes, there's a ton of value left in Microsoft. And actually earlier, before earnings, it hit a high of almost $217 before retracing to the 50 moving average here. There was a little bit of profit taking after a monster earnings season. And there's also talks that Microsoft is going to buy TikTok, which would be an insane addition to its portfolio. Its revenues grew 13% despite the pandemic, and it had $38 billion in revenue just the last quarter alone. All right, the next stock we'll look at is Apple. Now, there are two things with Apple. One, obviously, they killed their earnings. Nobody expected Apple to report such a healthy earnings during the pandemic when all their stores were locked down. And two, they announced another stock split. Now, Apple stock has actually split 4 times in history, the last time being 2014 when it was over 600 bucks. And after the split, I think it dropped down to around $93. Why is this important? Well, Apple lowering its cost basis per share entices a lot of investors. And you could see on Apple's chart that buying in after every split is actually a very sound decision, and almost too easy a decision. So after the split, Apple's share price will be around 100 bucks. Currently, it's around 425, so it'll be a little over $100. if the price stays where it's at. As a matter of fact, since the last split, Apple is now up almost 380% since 2014. Buying Apple after the stock split on August 24th is a no-brainer. As a matter of fact, if you bought one share of Apple before the first split in 1987, if you just bought one share, you would have 224 shares of Apple now. I own a ton of Apple already, but definitely for those that don't have Apple, I would buy when the stock actually splits on August 24th. Stock number 4, Netflix. Now, you might not think of Netflix as a growth stock, but here's Netflix monthly chart. And it is a growth stock because they are looking to expand their business internationally. To them, that market is still untapped and there's still a lot of market share for them to gain. But this is Netflix stock since 2003 when it was trading at a low of around 60 cents. It is currently $488. Now, Netflix did hit a high of $575, means it already established that level, and it is likely heading back there as all tech stocks do. It saw a bounce near the 50 moving average here at around $467, currently trading at around $488. Netflix EBITDA numbers are really impressive, coming in at a little over $12 billion last year, and their business model has only grown since the pandemic. And like I said, their move into the international market is something that you cannot ignore. If you look at Netflix PE ratio, it's around 82.44, which seems high. PE ratio is just the price earnings ratio, but if you look at it compared to its peers, it ranked lower than 89% of the 501 companies in media. All right, the next stock we'll look at is KL, which is Kirkland Lake Gold. This is one that we actually bought. I sent this out in the trade alerts. Currently up about 25% on this. Kirkland Lake Gold is a Canadian gold mining company, and it produced 329,770 troy ounces of gold in Q2 2020. It also eliminated its debt and currently has a positive cash position of $537 million, which is very impressive for a small mining company. One of the things that's super impressive about KL when compared to some of the other gold mining companies, it is one of the lowest cost gold producers, and its production costs are still relatively low compared to the industry. Now, with the value of the dollar declining and interest rates just being completely shot, there isn't anywhere really that you can diversify and put your money or your US dollars in a safe haven investment. So gold, that's why the price of gold and silver has just absolutely shot up. And it's been helping a lot of these small these mining companies, large and small. And one that's currently in a good position is Kirkland Lake. The price of gold skyrocketing is only going to help it. So aside from the price of gold skyrocketing, the company itself, based on the financials that I discussed, is still in a good position. So if you add to that the fact that the price of gold is rallying like crazy right now, you want to find mining stocks where these companies are producing gold at a pretty low cost and also eliminating their debt and increasing their cash flows. So KL is definitely a mainstay in my portfolio. And aside from some of the precious metals ETFs that I have, I think it's prudent to diversify into some solid mining stocks like KL. Speaking of precious metals, number 6 on my top stocks for August 2020 is Palladium. Now, palladium might not come to mind right away when thinking of precious metals because you think of gold and silver, but palladium has insane upside here. The price of gold looks extended. Silver looks like it has a lot more to run than gold, but if you're looking for another alternative, look at palladium in my opinion. So now there's almost been a complete shutdown in the auto industry, but palladium is used for a whole host of things auto related. It's used in fuel cells to power alternative fuel vehicles, but it is also used in combustion engine because it is much cheaper than platinum. That's why palladium has been taking off recently, obviously up until the pandemic. For long-term growth and recovery, I think palladium has a lot left, especially if the US dollar index starts going up, if the dollar starts, strengthening and gold price starts declining a bit. Palladium isn't really a precious metal that's used in hoarding like gold and silver. So it could provide you with an alternative precious metal investment that's geared towards recovery. All right, stock number 6 in my top stocks for August 2020 list is Germ. If you guys don't know what Germ is actually a new ETF. And if we take a look at what's in the ETF, you'll see here it says Germ provides unique exposure to a subsector of biotech industry. Passively managed fund holds companies that test and develop treatments against infectious diseases by focusing on companies at the forefront of R&D, vaccines, therapies, and testing technologies. And if you look at what's actually in it, it's basically made up of the stocks that are linked with COVID treatment and COVID vaccine. So you have Novavax,
Moderna, Biorad, Quest, Opco, etc. Most of its holdings are in Novavax, almost 10% in Novavax. But if you don't want to hold specific stocks and try to guess which vaccine stock is going to pop, then buying Germ for the long term here could be a lucrative investment, especially as these companies start rolling out treatments. You know, we're still in the early stages of trials and whatnot, but once these start releasing candidates, then you can expect companies within this ETFs to start rallying. All right, stock number 8 in my top stocks for August 2020. Top stocks to buy is AbbVie, ABBV. AbbVie is a large cap pharmaceutical company. It does about $34 billion in sales every year. Currently, its PE ratio is at around 10.42 compared to its industry peers at around 15, so a third less than its peers. If we take a look at its price, it definitely looks like there is a lot more to rally for AbbVie, especially as it beat earnings just recently. Positive earnings. The estimate was at 2.2 earnings per share. It came in at 2.34, and it currently retraced to the 50 moving average, almost at the S1 level on the pivots. And as you know, I do like buying things when they retrace or when they crash, especially if they are undervalued. And before the pandemic, I mean, AbbVie was trading above $100, almost at $130. Currently trading at around 94 after beating earnings. So I'm definitely going to be adding AbbVie to my long-term portfolio here on the retracement. All right, stock number 9, ATVI, Activision Blizzard. This is a growth stock that has just been going absolutely insane for almost its entire life. If you look at Activision since 1990, where it was trading at 3 cents, it's currently trading at $82. Okay, that's not Bitcoin like numbers, but that's still insane. And if we take a look at the daily chart, it's sitting at resistance, looking to make a new high. Now, its earnings are coming up soon. They're coming up next week. And if it actually beats earnings, then we could see new highs for Activision. See, back here in September 2018, it's around the same level that it's at currently. Now, it is definitely a pandemic safe stock because obviously everyone's at home playing video games, but especially with the holiday season coming up and with new consoles from Microsoft and Sony, we could see new highs for Activision if it does well on its next earnings next week. Stock number 10 to add to your portfolio for August 2020 is McDonald's. Now, the reason is McDonald's saw a little bit of a dip. It looks like there's a double top here where McDonald's might test, you know, one of these moving averages down lower. It did miss a little bit on earnings, but still came in on positive earnings. But McDonald's has been at these high price points before. So it was trading at around $221 last year and then almost at the same level before the pandemic. Currently sitting at around $194. So might be a little bit undervalued for the long term. I mean, McDonald's is a household name. I almost don't even need to go over the financials, but you know, it does about $20 billion in revenue every year. And its current PE ratio is at around 31.47 compared to an industry average of around 38.65. So still a little bit more room to grow in order to meet its peers, at least from a price perspective. But obviously this is a safe stock for the long term, not really anything novel here. So I just want to add, obviously this isn't a complete list. There are tons of things that you can even swing trade. There's tons of things that we're playing options on, continuously playing options on things like Tesla, Moderna, Inovio, Apple, Microsoft, Facebook, you name it. And there's tons of swing trades such as SPCE or NEO. So obviously this isn't an all-encompassing list. This is just to give you an idea of some of the stuff that I'm looking at and try to help you develop a strategy during these weird market times. What I usually do is I have a long-term hold portfolio where I, you know, add these stocks that I'm talking about. And then I also have a swing trading portfolio where I enter swings and play options that expire on a weekly basis. That's completely separate from my long-term holds because I don't want to dilute those. And like I said, if you haven't bought a ton of stocks on the crash, I mean, this is probably not the time to put a ton of money. We're nearing here resistance on the S&P 500. We're less than 5% away from all-time highs. We're actually about 3.6% away from all-time highs. And if we do see another correction now that all the FANG stocks have reported earnings, then you'll want to have cash on hand in order to buy a lot of discounted stocks at that point. You don't want to invest a lot here and then see the market crash. That's just my opinion. Obviously, you do what you want. All right, on to the sweepstakes. Let's take a look at the Webull account. All right, so let's take a look at ON Semiconductor. Oh, smack. ON Semiconductor is down. This was up about 4% just a few days ago. and now the total position is down about 0.25%. I think the last time I did the sweepstakes, somebody picked Deutsche Bank, was down God knows how much, and now On Semiconductor is down 0.25%. So unfortunately, no profits here, but leave your trades in the comment section below. I will pick one at random in the next couple of videos, and I'll enter it with about $1,000 or whatever's in this account, $1,095. I'll go all in and give you the profits. Whoever's comment I picked randomly, I will give you the profit. So leave that in the comment section below. Also, let me know what stocks are in your portfolio. Any of the stocks that I talked about, are they in your portfolio? What is your cost basis? Leave a thumbs up if you get anything out of this video. Sign up if you want access to the trade alerts. Link is in the description below. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.